Okay, next up we have Paul Hewitt, who's Executive Chairman of Karora Resources. Paul, a mining engineer, joined Karora Resources as Director in November 2018, became Executive Chairman in February 2019, and then was appointed Chairman and CEO in July of that same year. Paul has an extensive background in capital markets, engineering and operations. He oversaw the transformation of Karora into a gold-focused producer, including major initiatives to expand its footprint in WA. Prior to joining Karora, Paul was President and CEO of Clodex Mines for 6 years until its acquisition by Hecla Mining. And fun fact, Paul just moved to Perth this year in March with his wife and 5 of his 7 children. So welcome, and I hope you're enjoying it as much as we do.
Yeah, thank you very much. Thanks for the introduction. It's a real honor to be here in Kalgoorlie today, in one of the greatest mining towns in history. Actually, when I think about Kalgoorlie, it's my first time at a Diggers event. Kalgoorlie reminds me an awful lot of the town that I'm from. If anybody's been in Ontario, north of Toronto, I'm from Timmins, a very small mining town, about 30 to 40,000 people, very similar to Kalgoorlie, surrounded by headframes, open pits, some great miners, and it's an honor to be here amongst some of the greatest miners in the world here today in Kalgoorlie. Unfortunately, at a young age, growing up in Timmins, I was one of those bad Canadian hockey players. So I ended up in a mine at 18 years old, and I've been mining ever since that in the late 80s. Because it was one of my first inductions here at the Diggers event, I got to meet up with a mining/rock star legend here, this Peter Cookie gentleman. I met with him for a couple days, and he said, look, when you're presenting at Diggers, it's a lot different than PDAC, it's different than New York, it's different than this. And I said, well, look, I've presented pretty much all over the world. He said, no, mate, things are a lot different here. You got to do things differently. So I thought, well, you know what, it's a little odd, not something I'm used to, but I thought, why not have a bit of fun in it? So he said, part of the things that we do here in Diggers is we have this look-alike thing, and I thought, wow, that's a random thing to do, but maybe I'm up for it. I thought, I have the courage to do it. So he said, myself, I look a lot like this Eric Bana fellow, and I thought, you know what? Well, I don't really know Eric Bana a lot, so I thought one of my staff got this picture, and they put me next to him, and I sent this to Peter Cookie, and he said, no, mate, that's not it. Not that Eric Bana, this Eric Bana. This is you as a Canadian, Eric Bana, he said, and I thought, wow, hopefully I'm the one with ears still, I thought. Anyhow, that's my introduction to Diggers here into Australia. So it's been very exciting time for me and my family to join here in Australia, to live here in Australia. I moved from Canada to the US 20 years ago, worked in Nevada. Coming to Australia, it's been very exciting. The rain, I can say, I hope it lets up soon. But other than that, the people are great, actually. It's been a very good experience to date. Now let's talk about the company I'm part of. So where are we located? Let me put this wide. So we're located near Kalgoorlie here in Western Australia. We have the Beta Hunt mine and the Higginsville operation. We bought that Higginsville operation in 2019 from Westgold. It was a transformational acquisition for us. Once we bought that, we became a producer overnight, actually, and we've been producing at about 25,000 ounces per quarter, with the exception of the last quarter. Actually, the last quarter we stepped it up by 20%, and we delivered 30,000 ounces, so a big change. Where is that being fed from? If you look at the map here, that Higginsville Central, we have 2 mines feeding that, and then we've got our flagship, the Beta Hunt underground mine, and we're going to be starting up this Spargos mine that's to the west of Beta Hunt here this quarter. So a very exciting quarter for us. Let me just talk a bit about what we've accomplished and how we've transformed this company. We've really laid out the foundation here for the future years coming forward. If I look back into 2020, I'll take a snapshot, look at 2020, we'll talk 21, and then I'll talk about our future here. In 2020, it was our first year ever owning our own plant, self-sufficient, and not being a junior, relying on some other toll milling. We put out to the street that we would deliver 90 to 95,000 ounces. We actually delivered 99,000 ounces. This is our first year of owning our own mill. We managed to eliminate or reduce several royalties. When we acquired Higginsville, it had between measured, indicated, and inferred about 1.9 million ounces, but it had some massive royalties from Morgan Stanley, and those things had existed for about 20 years. We managed to eliminate those royalties, the NSRs, altogether. They're now a thing of the past for us. That gave us a reduction at Higginsville of around $46 an ounce. We took that a step further and we went over to our Beta Hunt operation that was also handcuffed with some serious royalties from Mavericks. We managed to renegotiate that royalty and reduce it by 37%. That was about $42 an ounce. It really set the stage for us to start drilling. And that's what we did in 2020. In fact, it was the biggest year of drilling in this district in a very long time. We managed to drill about $15 million of core last year, of core NRC, and we had 3 new discoveries last year. Not good targets, 3 new discoveries, and I'm going to talk to them afterwards. On our quest to deliver that 99,000 ounces, we were really focused at reducing our costs. When I first joined with Graham Sloan, who's over here in the audience, our MD, and there's several other members of our team that are here as well. And before I forget, I do want to say that we're at booth number 4, so if I don't answer all the questions or you don't get the responses here from us, please come and visit us over to our booth. Our focus was to reduce our costs. So initially our costs were well over $1,400 an ounce US, actually, and this is from toll milling and not sustainable production. We managed to get our costs last year in 2020 to around that $1,050 a mark, and we did it by reducing those royalties, reducing G&A. We met with our top 20 vendors. We were successful in renegotiating longer-term contracts, and we really stepped up on our productivity rates. We became a different company. Originally, it was Royal Nickel, or RNC. Some of you may remember it. We sold off the remaining 28% of the nickel asset that we owned in Quebec. A lot of people ask me, well, with nickel prices, do you regret it? And I said, well, look, what people forget is we only own 28%, and the other 72% was owned by a hedge fund, and we needed to redeploy our focuses in Australia. We needed to make sure we didn't fumble the ball here, and we did everything we could here in Australia. So selling that was a big part of our transformation, and then renaming ourselves from Royal Nickel to Karora. We ended the last quarter, Q2, with approximately $82 million in cash, and our shareholders have changed significantly along the way as well. We used to have about 90% of our shareholder base that was retail and about 10% institution. Today we're sitting at about 65% institution and the rest in retail. We've made changes to our board of directors. We've made changes to the executive team. We've really transformed this company in 2020. And the last thing we did in 2020 was put out our first maiden ever resource and reserve statement. We put out a 2P reserve of about 1.3 million ounces, and then the consolidated measured and indicated was about 2.52 million ounces, and that's followed up with about another 800,000 ounces in resource. When I look into 2021, where we are here now, actually, what is our guidance? Our guidance was a step up from last year, and it was a big jump, actually. We put about a 20% increase from last year's guidance. So we're targeting 105 to 115,000 ounces. And again, our second year now, so a lot has changed. We're putting together a drilling budget this year of $20 million in this district of 1,900 square kilometers that had been saddled by so many royalties for so long. So we're taking a district of 1,900 square kilometers surrounded by some very, very large gold deposits that hasn't seen a lot of love or drilling in a very long time. So we're quite excited about that. There's 3 key assets that we're going at. I'll talk about the growth after here in the next slides. But there's 3 key assets that we're doing to deliver this. Our Beta Hunt, which is our flagship underground mine. It used to be a nickel mine for years, and some of you may remember it. A couple years ago, there was a massive coarse gold discovery there at Beta Hunt. It was the Father's Day vein. I see some of the specimens that are here in the halls here in the showroom over there. Somebody's selling several specimens. So part of our plan is we don't include any of that coarse gold in any of our planning. Actually, The Higginsville mill is central, and we've got 2 undergrounds that we're starting up this year on the heels of a mill expansion. So this year is a very big year for us. We're doing a mill expansion internally. It's phase 1. We're increasing the mill by about 15% from 4,000 to about 4,500 tons, about 550 tons per day increase in the mill. That has been completed. It's really why we were able to increase our production last quarter by 20%. And then the Spargos open pit. So we've got Two Boys, an underground mine. We've got Aquarius, an underground mine. We've got a mill expansion. And then we throw on top of it for Graham and the team a new open pit with Spargos. And I'll show you some of the grades at Spargos. And we have a tremendous amount of upside and opportunity for those who know the district we're in with respect to nickel. Beta Hunt was a nickel mine forever. We have seen already to date savings on our all-in sustaining costs anywhere from $35 to $45 per ounce with the nickel production that we're doing. And we're only mining remnant areas today. We have had 2 new discoveries in nickel. They're the first new discoveries in nickel in 13 years. So we're very excited about the nickel perspectives that we have. In fact, we've put together a new nickel division so that we can focus on the 2 new zones that I'll talk about. They're the 30C and the 50C. And we'll continue to mine the gold. We'll be mining the gold, shipping it to the mill. And we'll mine nickel with an air leg team, and we'll ship that off-site to someone else's facility. So what's the future hold for us? What are we going to do? So despite COVID and all the challenges that are in our industry right now, we've actually put out a 3-year plan to double our production. So last year, 99,000 ounces. By 2024, that calendar year, we put out ranges between 185 to 200,000 ounces. That's a massive step up from where we are today. And it's starting this year by several of the steps we're doing, and I'm going to talk to several of these steps. On top of that, we're looking to continue our aggressive path on reducing our costs. Our goal is to get to about $900 an ounce, all in sustaining costs, and that's in US dollars. The exciting thing about this entire growth plan that we have in front of us is that it's completely self-funded. It's self-funded from the cash that we have in Treasury and the money we're going to be generating. We made sure it was a phased approach, and we'll be generating enough cash that we don't rely on anyone or the market or anything to deliver this plan. And look, there's significant upside in this plan. For example, the next 4 years, we're going to be drilling at about $20 million a year, $80 million of drilling. None of that upside is included in our growth plan. None of it's in our planning. None of the nickel upside that exists at Beta Hunt is included. We've got a 1,900 square kilometer district, so we're quite excited about what we can see from some of that drilling. In fact, this year we had another discovery at Lake Cowan. It was 1.4 gram of 50 meters. So there's tremendous amount of upside in this jurisdiction that we're in already. This is a bit of a breakdown on the ounce profile and then the cost, and I just want to share this real quickly. So 2021, I talked about the range 105 to 115,000 ounces. 22, we're going to 120 to 140,000 ounces. 23, this is when the mill upgrades are starting to take place. 150 to 170,000, and then on to that big year, 185 to 205,000 ounces by 2024. And then the goal to reduce all-in sustaining costs to about that $900 an ounce. The growth capital that we have in total is, there's ranges there that you can see, but it's close to about $190 million. Again, completely self-funded. It predominantly comes from 3 bigger sources. If I think about the 3 big areas, it's the mill expansion going to phase 2 from where we are today. Phase 1 is being done now, it's completed. Phase 2 will be expanding that mill from 1.6 million tons per year to 2.5 million tons per year. And then at Beta Hunt, our flagship, it's going to be about keeping it simple. Our motto is to keep it simple and repeat something that we've already done. We don't want to complicate our story. We want to keep it simple. And the best thing we can do is to look at Beta Hunt. This is Beta Hunt here. This is a long section of Beta Hunt. We're going to add that second decline into Beta Hunt. 2 years ago, we struggled at this operation to get 37,000 tons a month out of Beta Hunt. So less than, 400,000, 480,000 tons per year. Today, every month, we succeed at 80,000 tons per month. Out of that same ramp, we've got newer equipment, and you saw that on the previous slide, some of the new equipment, a different team. We've changed our strategy, but we're consistently getting 80,000 tons out of Beta Hunt. When we add that second ramp, and we put in that second production ramp, we double our production in tons. That alone gets us into that range of anywhere between 145 to 155,000 ounces per year. Just Beta Hunt on its own. That's excluding any of the upside of everything we have around Higginsville, the 1,900 square kilometers that we own, Spargos, and other things that we're already looking at. So when you think about how are they going to do it, in our minds we said, look, let's do something we've already done, which is take the mine from 37,000 to 80,000, and then do it again. Just repeat it with that second ramp, keeping our story simple. This is just a picture of one of our new trucks, the royalty here that I talked about with Mavericks. And then as soon as the royalty at Mavericks was completed, we started drilling there. We refused to drill at Beta Hunt and spend our shareholder dollars while that royalty was so onerous on ourselves and our shareholders. So after we finally got it negotiated, this is when we had the Larkin discovery, we had a new footwall zone discovery, and then we had the new nickel discovery. So last year, with that drilling of $15 million, we had 3 brand new discoveries that we're following up on. The next 4 years, we're spending $80 million. $80 million in a district near Kalgoorlie. You think about the amount of work that's going to generate. Think about the upside that we have in a district that's been handcuffed and saddled with these onerous royalties. Who knows what we're going to be able to find? But for sure, we're quite confident in our geological team, aren't we, Steve? Yeah, thank you. No pressure, Steve. Here's a plan view of Beta Hunt, and it's just showing where we're focused right now. There's over 400 kilometers of drifting underground at Beta Hunt. That serves as a great platform for us to be drilling from, to be accessing the gold that sits below the nickel. It's a tremendous amount of capital that we have in front of us. And one of the most expensive things I've seen as a general manager, mine manager, a CEO, is sustaining capital that we always endure every year after year after year. In our case here, we're going to be spending about half of the sustaining capital because we can access a lot of our zones, our economic zones, through the existing tunnels that exist here. We've got the 4 active areas at Beta Hunt now are the western flanks, the A zone, and the A zone is the area that we've discovered all that coarse gold. And look, it's not a one-off thing. We continue to find coarse gold. We haven't found another 30,000 ounce, but we've had like 6 or 7 other discoveries of anywhere from 1,000 to 3,000 ounces. So we encounter that coarse gold. It's just not put into or built into our plans. The Fletcher area and the 50C nickel trough that we've just discovered that had a 4.6 meter of 18% nickel. So look, these are some impressive grades on nickel. What we could potentially do here is stop mining remnant areas and stop cherry picking some of this stuff and start mining it at a larger scale. So just if you think about the economics, if what we've been doing so far with the nickel, we've been saving about $45 an ounce. Our average grade with the nickel has been about 2.9%, and we're mining about 6,000 tons each quarter. If we double that, and you look at some of these grades, look, we've got 11.6% nickel here. If we double the grade or increase the grade but double or triple the tons, you can see how that's going to have such a positive impact on our all-in sustaining costs. And we want to do that. We want to be able to differentiate our operation and take advantage of that nickel to keep our costs down, actually. I was going to say, if gold goes down, but we're at a gold show. I don't want gold to go down, but who knows? We need to be ready for it, right? We need to always, I've been in how many cycles now? If gold prices aren't in our favor, we have that nickel to help us with our costs. That will differentiate us a lot. We're still awaiting some of the assay results, like others here in the room, I'm sure, on the Larkin zone. That's a complete new discovery just south of the Alpha Island for us. We've seen grades in this zone almost 40% higher than the average grade of our Beta Hunt. Beta Hunt averages anywhere from 2.6 to 2.8 gram. We've seen grades 4 to 6 gram in this Larkin zone. So we're quite excited about what the Larkin zone can yield for us and our shareholders. Here's a picture of our Higginsville operation. The first two were Beta Hunt with the truck, and then the long section of the mine. This is one of the new undergrounds that we're starting up here. This is the Aquarius. This is the box cut that we're cutting out here at Higginsville, and this is less than 2 kilometers away from our plant here. A map showing the two buoys in blue and Aquarius in blue, and obviously our mill, the central area. So we're going to be focused this year and next year at feeding the mill from 2 buoys in blue, Aquarius from blue, 2 undergrounds. Spargos isn't on this map. You saw it earlier. It's on the west end side. It's starting up next quarter, and obviously continuing that feed from our Beta Hunt underground mine. Here's a great long section of Spargos. So we bought Spargos, first quarter of 2020. We paid $4 million for this. We paid $4 million for an asset, and if you look at some of the drill results that we had intercepted at Spargos, just read them off the slide: 29 grams over 19 meters, 27 gram over 15 meters, 29 gram over 3 meters. This sits just north of that famous Wattle Dam that was a very high-grade open pit that went into an underground. It's on the same geologic formation, same structure, but just directly north. So we're quite excited about Spargos and what could happen here. We could potentially have, based on these results, a very high-grade ore shoot. And there's a very strong likelihood that we could be mining underground at some point at Spargos in the future. Just getting close to the end. I see the timers coming close here. One of the things I did want to touch base on, and I've heard it here in the room watching other presentations, was ESG and net zero and our commitment and our conviction. From our board of directors to myself to Graham Sloan, who's in the audience, all of us, this is something we really believe in, and we believe that we have our part to play in it. We're going to be putting out our first sustainability report here in the very beginning of 2022. We've hired a group to help us with that. More importantly, we've hired a second group to help us with net zero. We've been very focused on Scope 1 and Scope 2. Scope 3, we're working with the group, and we're trying to become one of the first net neutral companies. We emit, I think it's around 75,000 tons of carbon a year. We're looking at offsetting that and trying to become net neutral. So this is something that's really important to us, our board. It's very important to many of our shareholders right now. We're listed on the TSX, but our shareholders are predominantly all in North America today. That will change, hopefully in the very near future. And this is something that's been extremely on the radar for quite a while here now. Just a corporate summary here. We've got 8 analysts currently covering us, up from 2. I talked about the cash. I'm not talking about the outstanding shares. Again, I'll just repeat that a large part of our shareholders are institutions, which is a huge shift from where we were. And I believe that wraps up my slides here. So I kept it right at the 25 minutes. Perfect. Yeah.
We do actually have a few questions that have come through. So is there any questions from the floor quickly before we go to the live stream? A couple, but along the same theme, so I'll paraphrase. Dual listing. Have you considered listing here in ASX as well?
Yeah, look, there's absolutely no doubt we're considering listing on the ASX. We want it to be successful. We have to be smart about it. We have to think about the right timing. We're sitting on $85 million or $84 million in cash here. We're going to generate enough cash to make sure we can deliver that growth plan to get to 200,000 ounces a year. When you look at an ASX listing, and for it to be successful, you need some kind of activity. You need some merger or acquisition. You need to raise money for the listing to be successful. Right now, we don't have a clear use of proceeds unless we accelerated some things in the nickel or did some other things. But as much as we want to do an ASX listing, the timing's just not on par for us today. But it's certainly something that we keep very close to ourselves. And look, the fact that I've made a commitment to move from the U.S. here, I'm Canadian, I moved to the U.S., moved my whole family, it means that we've pretty much effectively shut down our entire Toronto office. It's completely gone. Listing in Australia makes sense to us. We've got to find the right path.
Great, thank you for that. And one cheeky question, only been here a couple of months, Eagles or Dockers?
Any what?
Eagles or Dockers, have you picked an AFL team?
Okay, so I've been to one game and it's always got to be the Eagles, I'm told. So,
I disagree. So.
That gun to my head, I was told. All right, thank you.
Thank you very much, Paul.
Thank you very much.